Hey, this is Matt from InvestiQuant. Today is Thursday, February 10, 2022. The markets are seeing a strong reversal this afternoon. So we had giant down gaps this morning. I'm looking at the S&P chart here in the top left, and I'm going to show you the price action here. We opened right here, took off to the upside, very strong price action this morning, made it right to yesterday's close, yesterday's high of day area, and reversed sharply from there. Sellers are now taking over, and we are seeing new lows. We're now trading below the open. We've got a little bit different price action in some of these other instruments, but that's kind of what has happened in all of them. Was a strong push up, and then we are reversing. And what we're going to be looking at specifically is this pattern here in the S&P that has taken place, where we have opened below the prior day low. We filled the gap, and now we are trading below the open going into the afternoon. So let me get this set up. We'll be using a 3 p.m. Eastern time entry that'll exit at 4:15 p.m. Eastern time. Next thing I'm going to do is go to this opening filter and say we open below the prior day low. I am using this filter. I was looking at a couple different other ways to do it because the gap was so big this morning. In fact, you can see gap size there. 62.75 points, which comes out to 87% of the 5-day ATR. That's huge. If I use something similar to that, you'll get almost no samples. That's how rare this pattern is that we're looking at. But I can use open below the prior day low and grab more samples and capture the idea here with it. So that's what I'm using in this study, is the open below prior day low. All right, next thing I'm going to do is go to the post-open filters and say the 3 o'clock price is below the opening print. So I'm going to do that by going here, intraday close versus intraday range. I'm going to say close below open, and I'm going to say that the gap was filled. So the opening gap here, I'm going to hit equals next to gap filled. That means that we traded to the prior day's closing price. So we've got this giant down gap, which we opened below prior day low. We rushed up to the prior day's closing price, filled the gap, and have turned back lower. All right. Last thing I'm going to do is I'm going to go to the indicators, and again, I'm trying to keep as many samples as possible because this is pretty rare price action that we're seeing this afternoon. And I'm just going to use above a 200-day simple moving average to keep as many samples as possible. Normally, I'll add a second one in there, but that's just going to cut down on samples. So we're going to use above a 200. Now I'm going to click View Results. All right, here we go. These are the results based upon entering the market long at 3 p.m. Eastern Time, exiting at 4:15 p.m. Eastern Time. When you open up below the prior day low, you climb up to fill the gap above, and then at 3 o'clock, you're trading back below the open, which is also below the prior day low. This is taking place above a 200-day simple moving average. Historically, 31 samples in the S&P. We've got 42 in the NASDAQ, 42 in the Dow, 32 in the Russell. Win rates on these are mostly weak. S&P coming in at 39% of these have closed above that 3 p.m. price. For the NASDAQ, it's 43%. Dow's more neutral at 52%, and Russell weaker at 41%. If we look at the average moves, the average loss larger than the average win in 3 of the 4 instruments. So that's true for the S&P. It is true for the Dow and the Russell. The NASDAQ has a slightly larger average win, which I'd call those pretty comparable in size. So generally speaking, this pattern has leaned a bit more bearish into the close when it has happened historically. So we'll still have to see if this is going to be true at 3 o'clock. It's not 3 o'clock yet, so who knows if we'll be trading below the open at that time. But if so, at least for the S&P, this would be true. Hopefully you found that helpful. Good luck today. We'll see you next time.